Hello, welcome back to my channel once again. Today I'm going to be sharing my trade recap on gold. Today being 12th of May, 2025, I actually cut 3 consecutive trades on gold, which I'll be sharing those trades with you guys. So I'll be showing you guys my confluence and the confirmation I actually looked at before actually entering those trades. So join me. Hello, my people. Welcome back to my screen. So this is my gold chart, and I will be giving you guys the trade recap on how this particular trade all went through. So I will start with this one firstly. We are actually on the 5 minutes time frame. We're on the 5 minutes time frame, and we are on the 5 minutes time frame. We have two POIs. We have two POIs. I will want to make it practical. We have two POIs. This is the extreme POI and this is the decisional POI. Now, why did I actually choose the decisional POI instead of the extreme POI? Now, if you look at gold, you would know that it's better to trade the extreme POI than to trade the decisional POI. But there must be a reason why we are trading this decisional POI. So, irrespective, why I actually choose decisional POI was that I saw an engineered liquidity. I saw an engineered liquidity. And irrespective, this particular market got to this zone at around Asian session. That's around 2:40 a.m. Nigerian time. So irrespective, because of this liquidity, I knew that this particular order block was going to hold the market. Irrespective, the market came at the Asian session, tapped me in. After it tapped me in, can you see my psychological level? That's my key level. This is my key level. If you look at my TP is at my key level, irrespective, the moment it got to my TP, it smashed TP and started reversing immediately. So these are the use of my key levels. You will actually see the use as time goes on, but right now, this particular first trade was taken based on supply and demand. So irrespective, I rallied this particular trade from this zone to this zone. So we got a 7:1 RR. It's 6.67 RR, but it's 7:1 RR. So irrespective, we actually caught this first trade. Now this particular second trade here, this second trade, I I actually expected that the market was going to respect this extreme order block. But irrespective, why it did not respect this extreme order block was that this particular level is my fib level. That's my 5.0 0.5 level. That's my 50% level. And how did I get this 50% level? Let's go to that. Let's go to our 4-hour time frame. On our 4-hour time frame, on our 4-hour. Now, this is how I actually caught this fib level. This is the swing high of the market yes, this is the swing high. This is the high that created all these cells to this zone. That's the high that created all the cells. So what did I do when I got all of that? I actually draw my fib level. As you can see, you will see my 0.5 level lying on this particular zone. On this zone here, my 0.5 level is lying on this zone here. So I expected the market to tap into this 0.5 level before we see an immediate rally down. But irrespective, it did not respect my 0.5 level. Irrespective, I didn't take that particular trade. So let's go back to the 5 minutes time frame. That is how I actually got that particular confluence. That is how I caught this particular confluence, but the market did not respect the zone. So irrespective, it's also a missed entry. This is a missed entry. So irrespective, I expected that hadn't been this market broke past this level, this particular 0.5 level will be respected. It would be respected. But because the market did not break through this key level, or maybe you call it a psychological level, that's why the market did not respect this our 0.5 level. So irrespective, it did not respect our level, and we we took the second trade at this point. Now, as for the second trade, we used break and retest. Break and retest. Break and retest. As you can see, this is a liquidity. This is a liquidity here. This is Thursday. This market, this particular trade is the Thursday trade. So as you can see here, this is a liquidity here. Yes, we know this is liquidity, or we call it an inducement, but this is not an inducement. I will call it a liquidity. So the moment the market came to this order block, I didn't enter immediately because this is not my A plus setup. I didn't keep sell limit. I waited to see the break of this order block, maybe a liquidity sweep. So like I say, this is a break and retest. This is liquidity, and this is our order block. What I was waiting for is that I knew that this order block was not going to hold this market. It was too obvious because there was no enough build up here. There was no consolidation. There was no momentum. It was just choppy. And we had an order block. Don't forget, this order block now does not have imbalance. That's number one. No imbalance on this order block. We only have liquidity, or maybe you call it inducement. We only have liquidity and order block. So I knew that this particular order block was not going to hold the market. So I was waiting for a break and retest. I was waiting for a break and retest. Irrespective, what happened? The moment the market got to my POI, it actually consolidated a little, and it broke the order block. And what made me enter the market? What made me enter the market was this particular candle. This particular candle here, 3:15 a.m. candle. This candle came out, swept this particular candle's low, and gave us a huge momentum. The moment I saw this momentum, I entered the market immediately. So irrespective, I knew that was a break and retest, and we were able to catch a 5:4, 5:1 RR. 5:1 RR. That's how we caught this second trade. Now, why did we know that this particular trade is going to break? Because our trading rules is not complete. We only have an order block. Yes, we have a break of structure, but we have an order block that does not have an imbalance. The order block does not have an imbalance. That means the market is going to run through that particular order block. So that is why I actually took this particular trade. So on the third trade, yeah, this is the third trade now. Now this is my psychological level. This psychological level gives me an extra confluence. My key levels give me extra confluence. So irrespective, what am I looking at here? We saw a break of this key level. Now, if I am actually going through break and retest, what am I expecting the market to do? I'm expecting the market to come like this. Since it has broken this level, retest this level, and continue coming down. Normally, that is how I'm supposed to trade break and retest. This is how I'm supposed to trade break and retest. But irrespective, I waited to see, because gold is very volatile. I waited to see that, is this a manipulation of the key level, or is a continuation that will retest and continue going to the next level? No, irrespective, I saw a huge momentum. This momentum now made me understood that this is a manipulation. They manipulated people into this market. This is manipulation. Irrespective, I saw a momentum that brought us back into this zone. But irrespective, the moment I saw a retest, I knew that the moment I saw this particular momentum, I knew it was a retest. I kept my sell limit immediately. So now I have two confluence for this particular trade. My first confluence is actually a breaker block. Now, that particular breaker block now is lying on my key level. That breaker block is on my key level. Now, for this breaker block now, what did I do? I marked only the body candle. That was what I marked. Let me me make this. You see, this was the body candle I marked. I knew that this breaker block was going to hold this market because number one, this is a breaker block. Number one, this is a key level. Number one, this is a breaker block. Sorry. Number two, this is a key level. Number three, this is a fair value gap, an imbalance. Can you see three confluences that made me knew that this market was going to go on the upside? So irrespective, with all those confluences, we rallied this particular trade from this zone here to this particular key level, and we actually got a 7:1 RR. 7:1 RR. So that is our third trade. Our fourth trade was an SL. Our third trade was an SL. So irrespective again, I was trying to trade break and retest. Break and retest. Like I said the last time, manipulation, isn't it? Manipulation of the key level. So what am I expecting? I was expecting a manipulation, retest, and to the next key level. But what happened? Irrespective, this is what happened. That's our break and retest. But on the other hand, this is what happened. Manipulation, instead of retest, break of key level. Can you see? Break of key level. Retest. Can you see the retest here? Retest and started coming down. Can you see the manipulation? So that is how they actually manipulated people into these markets with this key level, with this particular key level. Manipulation, retest, and distribution. Irrespective, I actually got an SL here. I was supposed to actually wait, patience, because that's what a forex trader actually does the most. Patience, waiting is part of the game. But I didn't wait enough here. I didn't wait enough. Irrespective, the market came, boom, and stopped me out. And that is how I actually got an SL on this particular trade. Irrespective from that, I didn't take any trade again. And that is how I actually smashed 4 consecutive trades on it's 3 consecutive trades. That's how I actually smashed 3 consecutive trades on gold. So thanks for watching my trade recaps, guys, and I'm gonna see you on the next one. Peace out.